Did you know with the first-time home buyers plan, you can use up to $35,000 of your RRSP savings for a down payment, tax-free? And if you're a couple, it doubles to $70,000. Amazing, right? But how do you qualify? And how do you even know if you're a first-time home buyer? That's coming up right now. Victor here, and welcome back to a series of videos that goes behind the scenes of mortgage financing to help Canadians get approved for a mortgage they deserve. If you're new here and want to receive easy-to-understand mortgage news and tips, please consider subscribing. Now, there are 4 conditions you must satisfy to qualify for the home buyers plan. We're going to spend a little bit of time on the first criteria, which is you must be a first-time home buyer. But how do you know if you're a first-time home buyer? You'd think the answer would be obvious. Doesn't it mean you're buying your very first home? Nope. To make matters even more confusing, even if you've owned a home in the past, you may still qualify. So let's get to the bottom of this. According to the Government of Canada website, you are considered a first-time home buyer if, in the 4-year period, you did not occupy a home that you owned or one that your current spouse or common law partner owned. The 4-year period means the 4 years prior to a home purchase. The period begins on January 1st of the 4th year before the year you withdraw funds from your RRSP and ends 31 days before the date you withdraw the funds. Did you get all that? Don't worry, here's an easy way to figure this out. Start with the date you need the RRSP funds to purchase your home. As an example, let's say July 31st, 2021. The first step is to go back 31 days from that date. That takes us to June 30th. Then go back exactly 4 years, or in this case, to June 30th, 2017. The final step is to move back to January 1st of that year, which is January 1st, 2017. What if you sold your home on December 31st, 2016 and have been renting since? You're a first-time home buyer. What if you owned and sold 3 properties before this period? You're still a first-time home buyer. What if your spouse or common law partner owned a home during that period, but you didn't? Great question. The Government of Canada website states, even if you or your spouse or common law partner has previously owned a home, you may still be considered a first-time home buyer. If you have a spouse or common law partner, it is possible that only one of you is a first-time home buyer. So yes, you may be considered a first-time home buyer, providing you also did not occupy a home that your spouse or common law partner owned. Each individual must satisfy the definition of a first-time home buyer. Each person or both can be considered a first-time home buyer. The second condition that must be met is you must be a resident of Canada when you withdraw funds from your RRSP under the home buyers plan, and up to a time a qualifying home is bought or built. The third condition is you must have a written agreement to buy or build a qualifying home, either for yourself or for a related person with a disability. The fourth, and equally important to understand, is you must intend to occupy the qualifying home as your principal place of residence within 1 year after buying or building it. This means you cannot use your RRSP funds to buy a rental property unless you plan to occupy the property as your primary residence. So, if you rent out the basement, for example, that could be okay as long as you live in the house. So, to recap, the 4 conditions to qualify for the home buyers plan are 1. Be a first-time home buyer. 2. Be a resident of Canada. 3. Have a written agreement to buy or build a qualifying home. And 4. You must live in the property you intend to buy. Based on this, do you qualify? If so, you may be eligible to withdraw up to $35,000 tax-free. Remember, both you and your spouse or common law partner qualify separately. So if both of you qualify, up to $70,000 tax-free can be withdrawn to be used to purchase a home. I know, this is too good to be true. What's the catch? Well, the Government of Canada is allowing you to take this money out tax-free because it's really a loan. The good news is that it's an interest-free loan. Also, you have 15 years to pay it back in equal installments. The payments start 2 years after you withdraw the money. So, for example, if you withdrew $35,000 from your RSP, divided by 15, that's a repayment of $2,333 per year. Finally, note that repayments do not affect your RRSP contribution room. Now, we've only covered the basics of the Homebuyer's Plan. If you would like to take advantage of this program or learn more, I suggest you get more details by visiting the Government of Canada's website. The link is in the description below. Navigating all these mortgage rules can be complicated, but I'm here to help. Book your free discovery call and we'll figure it out together. Contact details are in the description below. Thank you for watching, and don't forget to subscribe. Have a great day, and I'll see you next time.